Module 6. This module is about internal controls, governance, fraud, and risk management. So by the end of this module, you should be aware of the importance of effective internal controls, understand some of the basic principles of corporate governance, describe a comprehensive risk management process, and understand measures to mitigate and detect fraud. And you'll be pleased to know there is no textbook chapter and no online quiz for Module 6. Okay, so having a look at the importance now of internal controls, governance and risk, the survival of a cooperative is highly dependent on having effective internal controls, appropriate governance, fraud detection, and risk management. If you have a lack of oversight on any one of these four, this can actually result in the failure of your cooperative. So it's very important. So while these matters are generally well managed by the large-sized cooperatives, they're sometimes neglected by the small cooperatives because they think they really don't have the resources to address it, or we're so small we would notice if something was happening. Not necessarily so. So regardless of the size, it's really important for co-ops to have appropriate oversight to ensure internal controls, governance, fraud, and risk management. And it doesn't necessarily have to take a lot of time and resources to do it. It's not as bad as you might think to implement. Okay, so looking at internal control and governance, internal control, that's important with respect to the efficiency and effectiveness of your operation, for the reliability of your financial reporting, compliance with applicable laws and regulations. So when I'm talking about internal controls, what we are talking about here, for example, is the segregation of duties. So for example, the person who's managing accounts receivable should not also be responsible for doing the bank reconciliations. Similarly, the accounts payable function should be separated from the purchasing and approval and control over suppliers. So think about it. If you have someone who is responsible for identifying who the supplier is, setting up the supplier account, placing the order, and then paying the bills, they could be paying themselves or their brother or sister or friend or a totally fictitious company. So you have to have those functions separated. So you want to keep separate, similarly with the accounts receivable. So the person who is doing the bank reconciliation, who's doing the bank deposit, shouldn't also be accountable for managing the accounts receivable, because the same thing could happen. The payment could come in from a supplier and they could redirect those funds to their own account and adjust the receivables accordingly. It could go on for quite a while before you become aware there's a problem. With respect to governance, having an effective board of directors is key to running the cooperative. There's also importance of having committees of the board with respect to, say, an audit committee, a compensation committee. For example, a compensation committee would make decisions around the compensation package for the CEO and the senior management group. And of course, because of the nature of a cooperative, you really have to consider democratic control and member involvement on the board. And for some cooperatives, it's really challenging for them to get the level of expertise they need on the board, because if you're required to choose your board members from your co-op membership pool, and if nobody in that pool is a lawyer or an accountant, then that's really going to put you at a bit of a disadvantage. Because how can you have effective oversight from the board if there isn't any financial expertise on the board? So this is something you have to be aware of. Fraud. management is responsible to have effective internal controls in place. So if you've done everything right, you've made sure that the person who is doing the purchasing is not the same person who's paying the bills, that's pretty much all you're responsible to do. You can't totally prevent collusion. So if you've got the person in purchasing, if they're sort of in cahoots with the person in accounts payable, you know, you have to be aware that if they have a relationship, that this could be a problem. So it's something you need to observe, but you can't prevent all frauds, but you should have some basic internal controls in place that would discourage that from happening. Also, it's important to realize that it's not the responsibility of your auditors, your external auditors, to detect fraud. All the auditor is going to do is identify, do you have effective controls in place? So, as I mentioned, even when you do have good controls in place, you know, you can't plan for every event. You can't really mitigate for collusion if two or more individuals are colluding and defrauding the company. However, there's some things to watch for. If a person's lifestyle is such that you think they're living well beyond their means and they're living well beyond the salary they're making here, you know, if they're driving high-end vehicles and taking exotic vacations, you might want to have a close look at operations to see what's happening there. So with respect to risk management, so the board is responsible for the oversight of the organization's risk management, but management must also play a key role and work with the board to ensure that the board is following a comprehensive risk management practice. This encompasses leadership and strategy and even the performance of the board itself. So because in many cooperatives you have board members who don't necessarily have a lot of expertise with respect to, say, accounting and auditing and fraud, you then have to provide education to the management, to the board group. They're going to need some education and professional development to understand their role and what it is they're responsible for overseeing. So Living Lab number 6, what we're doing here is, you can use your own co-op or another one of your choosing. And there's 3 questions on this discussion board. Answer all 3 with respect to Code of Ethics, Audit Committee, and Risk Management approach. And this concludes Module 6.